Hello, my good students. I hope you're all well. My name is CPA Aringo Frederick, and I do teach business data analytics as well as financial modeling and, of course, data analytics at Mdarasa Digital College. Now, today's session, I want us to look at a question which was tested in August 2025, and it is on application of management accounting in business data analytics. So our question here, it is a very good question that will help us to understand, of course, a particular component in management accounting. So this question was question number 23 in BDA August 2025 sitting. So let us go through this question and see what the examiner wanted us to have. Remember, the most beautiful part with business data analytics, or the secret, will always be once you know how to use some various functions, then you're just good to go. We're told you're the management accountant for Malus Tech Limited, a company that produces two types of products, alpha and beta. The company wants to understand the cost structure and profitability of both products as well as their break-even points based on the following data for the month of July 2025. So a given product alpha, we have product beta, yeah? So in addition, we also told in this case that the selling price and the units cost, these are the items of cost that you're given. You have product alpha. So in this case, we have a variable cost, selling price per unit, as well as a fixed cost and units given there. Required, a good examiner wanted us to prepare a contribution margin statement and the net profit for each product. But B, we are supposed to calculate the break-even point in units and in revenue for both products, alpha and product beta. Calculate the margin of safety in units and percentage for both products. We also require to perform a sensitivity analysis by calculating how 10% variable changes in all product data other than fixed cost for both products affects contribution margin and break-even point as well. So Mwalimu has always talked about presentation. Presentation is a one key element that will determine, of course, the impression that the marker will have on your working or your solutions. So in this case, we start by considering, of course, we have a solution here. Looking at it at this point, the first thing we are required to do is to prepare this item here. So we're required to prepare, of course, contribution, margin statement, and the net profit for each product. It is important to recall the stages that Mwalimu had taken us, whereby anytime you talk about contribution margin, all that we should always be able to recall is that we're about selling price per unit minus our variable cost per unit. That is one element. We talk about contribution, total sales minus total variable cost. And in another way of determining our profit, recall, profit will always consider our contribution here minus our fixed cost. These are just the basics that, of course, Mwalimu had guided us. So in this context of ours, in this case, you take the two products given. So what you're going to do, actually exactly as how we are given, is how we are going to copy paste. So this is the data that you're given. So I'll just copy paste all of this at once. We have it here. All you want to prepare is, of course, contribution, margin statement, and the net profit. So you're having contribution, margin, of course, and profit statement. And the profit statement here, go to title our case. We have two products, that is product M and product, of course, product M and product alpha and product beta. These are the products that you're given here. So once we have this, all I'm going to do is to consider or to take this item and just have it below here. Units sold in this context, I can have it at that point so that my contribution margin, we have to take our selling price per unit minus variable cost per unit. This will give us, of course, our contribution margin. I drag it at that point. So we have our contribution margin for each product, determining our contribution, which will help us to come up with a profit. So contribution, we are going to take contribution margin times the units sold, which will be having it at this point. So this is our contribution margin. What you're having here, these are contribution after we have multiplied by the number of units. We are required to determine our profit. So therefore, our profit here, our task will be easy. We take our net profit, therefore, to be net profit. In this case, you're going to consider our contribution here minus our fixed costs to give us a net profit as per what you're required to do. See, how long has it taken you to work out that one? Remember, the whole idea is the concept here. And the beauty part, in this case, we don't have like special functions that maybe we might be required to use. So we have selling price per unit minus variable cost per unit. We have the units sold to give us contribution less our fixed cost to determine our net profit, just as what Molimo guided us on this point. Okay. So after that, we go to part B of the question. And part B of the question, what are we asked? So we take our question here. We take our question here, part B of the question. We have it here. So part B of the question, our good examiner here had asked us to calculate the break-even point in units and in revenue for both product alpha and product beta. It is important for us to recall what Molimo had guided us in regard to break-even point, where anytime you talk about break-even point, kindly and always remember to consider our fixed costs here. We divide by our contribution margin. This is break-even point in quantity. Break-even point in quantity. If at all you want to determine in value, similar process will apply. Break-even point in value, we take, of course, what you're given, this cost of contribution margin. The only item that you're going to incorporate here would be we multiply by our selling price per unit. So this will give us then our aspect of break-even point. So like in our case, for the two products, taking our details, we have the contribution margin component. We have our fixed cost for the two products. So this is to say we can easily then determine our aspect of contribution by considering our break-even point in quantity. Therefore, we agree what you're going to take for product Q or alpha, we have in 200. Contribution margin is what we have. For the other product, which is beta, the same case, we have our fixed cost here, divide by contribution margin. So we have all our sets right, so that as at the end of the day, we'll agree that therefore break-even point in quantity, that divide by that. So these are what you're having, break-even point in quantity. Break-even point in quantity. The first case that the good examiner wanted us to determine. The other part, we are required to determine break-even point in value. Yeah. So break-even point in value, therefore, all that will be required to do is to simply now take break-even point in quantity, we multiply by our selling price, which in this case, we had 700 for alpha, and we had 900 for beta. See, so this is our contribution, or rather break-even point in value, what you're required to do. See how simple it is, yeah? So long as you master the concept right, it will just flow like that. No struggling, no struggling, no struggling. So once you're done with that part, we go to the other part. Calculate the margin of safety, MOS, margin of safety. Again, Molimo guided us about margin of safety, yeah? So anytime you talk about margin of safety, we are looking at the range between our profit or range between our sales and the break-even point. So about sales minus break-even point, they should give us what? Our margin of safety. Like in this context, margin of safety for each product, margin of safety for each product, they want us to determine in units. So we have our sales units. For sales units, of course, we come and take whatever that you're given directly. So we just take the units. What we're given directly. We have break-even point units, BEP units, break-even point units. Again, you're given there directly. Break-even point units. Break-even point units, we had worked it out. So you come and take break-even point units. So this is our break-even point units. So that our task here is simple, is to determine the difference. To determine the difference. So therefore, my MOS, in this case, we take the sales units minus break-even point. We have our margin of safety, of course, in quantity. If at all you want to determine margin of safety as a percentage, now this should be easy. Why is Mwalimu saying that this will be easy? Because what will be required to consider now will just be, of course, so this is percentage. So just be required to take the margin of safety divided by the sales units here. See? Margin of safety divided by the sales units times 100. And this is what we should be having as margin of safety. As a percentage, margin of safety as units. Where you're having a question, make sure you ask. Yeah, it seems, or it is simple, right? We can all agree that once we have the concept, you'll find that the flow will always be like that. What are we asked? The other part, you are told to, of course, perform a sensitivity analysis here. See? Perform a sensitivity analysis. So these are what you're required to have. Perform a sensitivity analysis by calculating how a 10% variable changes in all product data other than fixed cost for both product affects the contribution margin and the break-even point. So this is easy, yeah, because now we take our contribution statement, what we had computed earlier. In this case, we want to see the effect, sensitivity analysis. Sensitivity analysis. See, so we want to simply look at sensitivity analysis on how 10% change on our product data will affect our case. So these are what you're talking about. See, so we just want to determine sensitivity analysis of how this will affect our case. So what are we going to do? If at all it is 10% variable, meaning that where we are talking of our sales will increase by 20%. So by 1.2, yeah. When you read about our sales, same case, this will increase by 1.2. What about variable cost per unit? Variable cost per unit, meaning that it will decrease, yeah? So by 0.8. This will also, variable cost, in this case, will decrease because it is favorable, right? It is favorable variance, so by 0.8. So this should give us our new contribution margin. The impact is on our break-even point. So break-even point, the same case, we are going to consider what will be our new break-even point now. What will be our new break-even point? So we have this case here where we are going to talk about break-even point in this context. Recall our fixed cost will not be affected. So we take our fixed cost, which will not be affected. We have them here. This will not be affected. But what is affected, or what has been affected in this case, it is in regard to our contribution margin. This has been affected. Contribution margin, they have been affected. See, they have been affected in this case. So eventually, we'll agree that in value, what will we be having? These are what we'll be having, of course, in both cases as well. So that units, we cannot have units in fraction. So we have this case. See? Remember, units also, if at all you're to determine our profit, if at all we are talking about our profit, if we are asked, right, we will effect it by 1.2, of course. We effect it by 1.2. So we are not asked for the profit. The contribution component is what you're having there. See? Contribution component is what you're having, there. So this is the effect of 10% or 10%. We've used 20. This is 10%, sorry. This is 10%. 10%, not 20, but 10%. If I just change here, 0.1. Yeah, 0.1. This is 10%. So that is 0.9. This is 0.9. So that is 0.9. We have, of course, 0.9, yeah? That is 0.9, 0.9, 0.1, 0.1. So 1.1 and 1.1 favorable. So kindly we can correct that. So we have our new contribution margin. And this is what you should be having, yeah? That's why it is always very good to be keen. Good thing is that we realize it early, right? We realize that early. So then this is what, of course, we were required to, of course, have in it, or what you're required to prepare. See, so this is what you ask. Imagine earning all the 20 points just like that, as simple as that, following the procedure right, and we literally have everything. Fixed cost was not affected. Contribution margin affected. The effect is what you're having. See? So that is what you're required, of course, to consider. So this is management accounting. Remember, our classes are on. For those who are preparing for your exams in December, you can always reach us out. Our number is 0708068851. You can always reach us out if at all you're preparing for your business data analytics and planning to sit for these coming exams. So this is what you're required to do. In our next class, you're going to look at auditing, because also you are required to work out something on audit. There's also that part of tax, and finally financial reporting. So at this point, guys, thank you so much. Hope to see you in our next class, where we are going to handle the other part of financial reporting. Thank you and see you in our next class. Bye.